Well, that big jobs report was indeed a big jobs report. 228,000 jobs created in November, coming in well above consensus. The civilian labor force also climbed 150,000. Participation stayed at 62.7%, but wages, let's say they edged up 2.5% from last year. And to a degree, that continues to confound the experts and all of the anecdotal information that suggests we should have a surge in wages any day now. However, goods-producing jobs just continue to pump out big, strong numbers. Mining up 7,000, construction up 24,000, manufacturing up 31,000. In fact, this is the best November for manufacturing going way back to 2008. Now, after the news, the Federal Reserve adjusted its fourth quarter GDP estimates. Now, you have two of them, right? The New York Fed went to 3.92%. The Atlanta Fed is under 3% now, but right there at 2.9%. Of course, couple all of that with the fact that all eyes are on tax reform and whether or not it slows down this economy or takes it and turns it into a high-speed locomotive. Here to discuss with me, Lindsey Piegza, Stifel Nicolaus, chief economist, and Danielle DiMartino Booth, former Dallas Fed advisor, now president of Money Strong LLC. Lindsey, let me start with you. I mean, the economic data continues to stack up. Great news across the board. I'm seeing that so-called soft data after the election morph into real hard data. What are you seeing?
Well, I think it suggests that the economy is stable at this point, but I still don't think we're talking about a robust economy. Even this morning's employment report, the top line number was pretty strong, the unemployment number down at a 17-year low. But if there really was that lack of slack in the labor market that 4.1% unemployment rate implies, we would easily be talking about 3.5% wage growth. So clearly there's still a significant amount of excess out there in the labor force waiting for these unemployed Americans to find gainful employment. So it's solid, but it's not yet this robust economy that I think a lot of Fed members are really trying to sell it as. You know,
Danielle, when you see something like strong business numbers, for instance, where people are salaried and those numbers may not factor into hourly wages, could we just have a bifurcated economy where certain people are seeing wage growth and others, unskilled perhaps, aren't at this point?
You know, I actually wrote about this. I actually wrote about this today, the bifurcated employment market that we have in this country. If you have a skill set, you are in high demand and you can command much higher wages and you're making more money. But then there is the other part of the labor force that is unfortunately expendable. And we have truly seen this bifurcation. But to your point about businesses, I'll point out a report that came out earlier this week, Charles, that showed that businesses are being formed, new businesses. We're not talking about small businesses. We're talking about the birth of new businesses at the fastest pace in a decade. And that, to me, is a very heartening statistic that shows that people do have growing confidence in what's to come for this economy. I hope they're right.
Lindsey, go ahead.
Well, I certainly do agree that the labor market is experiencing different levels of recovery from sector to sector. When you talk about IT, engineering, accounting, craft labor, these areas in the labor market, absolutely, we are seeing upward pressure on wages. But as your other guest just pointed out, particularly in the service sector, we're still seeing a significant lack of upward momentum in wages.
Right.
And I do expect that we're going to continue to see that loss of upward pressure as technology replaces a lot of these lower skilled workers.
Quickly, I've got to ask, and I'll ask you first, Danielle, about the Fed and the tax bill. How important is it that the tax bill pass? How important is it that we have a 20% corporate tax rate?
Well, I think the Fed is really following other data a lot more closely. They're trying to see if this unemployment rate is going to breach below 4%. The Fed tends to over-tighten into these moments, and my hope is that they do not do that because other areas of the markets are suggesting that it's pretty much 2 more rate hikes, and then they need to pull back on the throttle.
All right, ladies, unfortunately, I'm out of time, but you two of my favorite economists. I appreciate you taking the time. Have a great weekend.